Imagine waking up tomorrow to headlines saying the entire economy crashed overnight. Would you be ready for it? Or would your savings, investments, and job vanish before you could blink? This is The Passive Path. Today we're diving into the secrets behind economic time bombs, political games, and how you can still build wealth even if the world seems ready to explode. Because while politicians and billionaires fight over power, your future is on the line. I want you to come out of this video knowing exactly how to protect yourself and maybe even profit when chaos hits. Stay tuned. The next part, why some leaders secretly want a recession. In the early days of the Great Depression, a new president took office. His name was Herbert Hoover. People were hopeful. They thought he'd bring jobs, growth, and better times. But months after he stepped into power, everything fell apart. The stock market crashed by nearly 90%. Businesses folded. Over 13 million Americans lost their jobs. More than 5,000 banks collapsed. It wasn't Hoover's fault the crash happened, but history painted him as the president who let America fall apart. No one wanted to become the next Hoover, not even Donald Trump. Before becoming president, Trump said he hoped the economy would crash sooner rather than later. It sounded cruel, but he didn't want to be the man blamed for a mess he didn't start. Imagine taking office while a financial bomb is about to go off. If it explodes on your watch, your name goes down in the history books, even if the crash isn't their doing. This fear shapes how leaders talk, act, and push policies. Because to them, timing is everything. Think about your own finances. Timing matters for you too. Buy a home right before a crash and you could be underwater for years. Invest near the top of a bubble and your portfolio might shrink fast. But getting in early on good assets can change your life. Look at people who bought Amazon stock in the late 1990s and held on, or those who bought Bitcoin in 2015 for a few $100s. Timing doesn't guarantee wealth, but it gives you a chance to ride big waves and avoid getting crushed when the tide goes out. So while politicians play chess with the economy, you need your own plan, because nobody's coming to save you when the next crisis hits. The next part will show how global rivalries create hidden risks. The US-China economic chess match America and China trade goods worth hundreds of billions of dollars every year. But behind the scenes, it's not just business, it's a fight for power. Decades ago, the United States welcomed China into global trade. America bought cheap goods, China collected dollars. It seemed like a win-win. Americans could fill shopping carts at low prices. China became the world's second biggest economy. But cheap goods come with hidden costs. Factories in the US closed. People lost jobs in towns that once thrived on manufacturing. Communities in places like Ohio and Michigan still feel the scars. China grew stronger. It built up technology, invested in high-speed rail, launched companies competing worldwide. Some leaders in Washington felt threatened. Tariffs went up. Trade talks broke down. Suddenly, American businesses faced higher costs for parts and products. A microwave that cost $90 now sold for $120. Companies like Tesla struggled with the price of batteries and components. Businesses had to choose, eat the cost, or pass it to customers. This battle isn't just between two governments, it's on every store shelf, in every online cart. Inflation rises when products cost more. People's paychecks don't stretch as far, yet the connection between trade wars and grocery bills often goes unnoticed. And while leaders talk tough, business keeps flowing. Ships still leave China filled with electronics, toys, and furniture. American dollars still pour in, because shutting the door completely would shock the world. Even with all the fighting, China holds over $800 billion in US debt. That debt helps fund American spending. It keeps interest rates stable. If China dumped that debt, rates could jump. Mortgages would cost more. Car loans. So both sides keep playing the game. They threaten, they negotiate, but neither wants the entire system to fall apart. Because if it does, everyone loses. The next part will reveal how printed money travels across borders. Currency games and inflation traps money isn't just paper, it's power. Countries print it, but they also fight to keep its value strong. When America prints too many dollars, prices go up. That's inflation. Groceries cost more. Gas prices jump. Rent eats a bigger chunk of paychecks. Sometimes, America sends its inflation overseas. It happens like this. The Federal Reserve prints dollars. Investors look for places to put that cash. They rush into other countries, buying property, buying stocks, buying companies. All that foreign money pushes prices higher in those countries. Take China as an example. Years ago, money flooded into Chinese real estate. Apartments in cities like Shanghai doubled in price. Locals struggled to buy homes. So the Chinese government tried to block some of the foreign cash, but the money kept coming. Because investors wanted to escape inflation back home, this can happen anywhere. In Canada, foreign buyers pushed. Locals found themselves priced out. In Miami, foreign investors bought condos to park money safely. Prices climbed. When big money comes in fast, prices rise fast. When it leaves, prices crash just as fast. That's the trap. The dollar's power also comes from trade. If a US company wants to buy electronics from China, it needs Chinese currency. So it trades dollars for yuan. China collects dollars and invests them in US bonds. That helps America keep interest rates low. But if China stops buying, America has to pay higher rates to borrow. And higher rates mean more expensive mortgages, more expensive business loans, slower growth. Every American feels it. In higher rent, in pricier groceries, in shrinking 401k balances. This is why America cares so much about the dollar staying strong. If it loses value, inflation soars. Savings lose power. Investments fall. A cup of coffee could jump from $3 to $5. Or when one goes up, another goes down. If the dollar stays strong, it hurts exporters. American goods cost more overseas. But a weaker dollar means everything Americans buy from abroad costs more. It's a balancing act. And sometimes, politicians tip the seesaw to score points. For regular people, it means this. Keep an eye on the dollar. It influences mortgages, rent, car loans, even food prices. Invest in assets that hold value when currencies swing. Real estate, stocks, commodities like gold, because currencies may come and go. But real assets stay real. The next part will show how financial crashes destroy wealth, and how crashes happen, and who profits. Every financial crash feels like the end of the world. People panic. Markets plunge. News anchors talk about doom. But behind the chaos, someone's making money. Look at the 2008 crisis. Banks handed out mortgages to anyone who asked. Home prices soared. People bought houses they couldn't afford. Wall Street turned those loans into complicated products. Investors poured in billions. Then it all collapsed. Millions lost homes. Stocks tumbled. Retirement accounts shrank. But some hedge funds saw it coming. They bet against the housing market. While others went broke, they made billions. Crashes don't destroy wealth. They transfer it from those who panic to those who plan. That's why the rich get richer during downturns. They keep cash ready. They wait for assets to drop in price. Then they buy cheap homes, cheap stocks, cheap businesses. Years later, values recover, and they've doubled or tripled. But it takes discipline and patience. Don't throw all your money in at the top. Don't sell everything in a panic. Think about dollar cost averaging. That means investing small amounts over time. Buying a bit when prices are high. Buying more when prices drop. Over time, it evens out the highs and lows. During the tech crash in 2000, big names fell hard. Amazon dropped from over $100 to less than $10. But patient investors who kept buying made huge gains later. The same happened with crypto. Bitcoin crashed many times. People called it dead. Then it surged again. Crashes are part of markets. They flush out weak players. They reset prices. They open chances for those prepared. But it's never easy in the moment. Fear takes over. People watch headlines and sell at the worst time. Wall Street knows this. Big investors sometimes push prices lower on purpose. They shake out weak hands, then buy cheap and rise. The more you understand how crashes work, the less fear controls you. Look around now. Commercial real estate is under pressure. Offices sit empty in cities like San Francisco. Retail stores are closing. Debt levels are high. If this cracks, prices could fall fast. It might look scary, but it might also be the biggest sale of the decade. The next part will explore how America's massive debt. America's debt bomb in commercial real estate. America owes over $34 trillion. That number grows every second. Every dollar borrowed has to be paid back or refinanced at higher rates. The government sells bonds to fund its spending. Investors buy those bonds for safety and interest payments. But higher interest rates mean the government pays more to borrow, less money for other programs, more debt piles up. It's a vicious circle. If confidence drops, investors might demand even higher rates or stop buying bonds at all. That could trigger chaos. Interest rates shoot up, stocks dive, housing markets freeze. One part of the economy sits on a knife's edge. Commercial real estate. Office towers in downtown areas are half empty. Companies shifted to remote work. Fewer people go downtown. Restaurants close. Coffee shops shut down. Buildings sit dark. Owners can't pay their loans. Banks panic. Investors walk away from towers worth less than their debt. In cities like San Francisco, Chicago, and New York, skyscrapers are quietly going up for sale at huge discounts. A building once worth $100 million might sell for $40 million. Pension funds and insurance companies own many of these buildings. If values crash, retirement accounts take a hit. Even if you never set foot in an office tower, you're connected. Banks lend on these properties. If loans go bad, banks get weaker. They lend less to small businesses and families. The economy slows. This happened in the 1990s savings and loan crisis. It happened again in 2008. Commercial real estate might trigger the next wave. Debt is like a ticking clock. If rates stay high, the payments become crushing. If the economy slows, rents fall. Owners can't keep up. Properties go into foreclosure. Investors swoop in to buy cheap. That's the playbook. Look at Blackstone or Brookfield. They wait for pain. At a fraction of old prices, regular people can prepare too. Keep debt manageable, don't stretch too far on mortgages, build cash reserves, stay patient for buying opportunities. Crises create bargains, but only for those ready to act. The next part will talk about why building wealth is mindset over money, the power of choices. Some people think wealth only comes from being born rich, but that's not true. Look at lottery winners. Many go broke within 5 years. They spend wildly, buy cars, buy houses, help friends, and end up with nothing. Look at professional athletes. Some make tens of millions, then retire broke because they didn't know how money works. Wealth doesn't come from how much you make. It comes from how much you keep and how wisely you grow it. The right mindset changes everything. If you believe you can learn money skills, you will. If you believe it's hopeless, you'll stay stuck. A person working an ordinary job can become wealthy by living below their means, saving regularly, and investing for the long term. Small choices compound over years. $100 a month invested in the S&P, 500 grows into thousands. Over decades, it grows into hundreds of thousands. That's how wealth builds, but from steady discipline. People often say, I don't have enough to invest. But you can start small, $5, $10, apps like Robinhood or Fidelity let you buy fractions of stocks. No need for thousands up front. Think of it like planting seeds. A few dollars today become trees tomorrow. Another key is income streams. Don't rely on one paycheck. People lose jobs. Industries change. Having side income gives freedom. Maybe it's freelance work, or renting out a room, or selling products online. Each stream is a layer of safety and a path to freedom. During the pandemic, millions learned this lesson. Jobs vanished overnight. People who had side hustles survived better. Some even thrived. Knowledge is the biggest asset. Learn how markets work. Understand debt. Understand taxes. These skills pay for life. It's like a map through a jungle. Without it, you get lost. With it, you reach the other side. Wealth is not luck. It's built choice by choice. The next part, we'll look at wild scenarios shaping the world. The New World Order? Possible scenarios. Imagine waking up to news that Canada became part of the United States, one giant country, bigger than Russia, with massive oil reserves, fresh farmland, endless minerals. It sounds wild, but leaders sometimes float big ideas because big ideas shift attention and create leverage in negotiations. If America absorbed Canada, debts could shrink fast. New resources would boost the economy. It might solve America's budget headaches, at least for a while, but it would create new tensions. People would fight over laws, taxes, healthcare systems, cultures. Merging countries isn't like merging companies. Real lives get shaken. Meanwhile, America and China keep dancing around each other, sometimes rivals, sometimes partners, sometimes both. If they fully joined forces, the world map would shift. Other countries might feel squeezed or forced to pick sides. Trade rules could change. Military alliances could be redrawn. People wonder if China wants to replace America as the top power. China wants respect, wants security, wants growth. But taking America's place isn't easy, because America still controls key systems, like the dollar, like global banking, like military bases around the world. So the two giants keep negotiating. They fight in public, but often talk in private. Sometimes they cooperate quietly, because neither wants total chaos. yet both want the upper hand. This tug-of-war shapes trade deals, currency values, stock markets, and personal freedom. Ordinary people feel the impact in prices at the store, in job security, in how safe their money feels. Alliances are shifting. Countries like India, Brazil, and Saudi Arabia look for new partners. Europe questions its loyalty to America. Japan wonders how to stay protected. The world is splitting into camps. It's not just about politics. It's about who controls resources, data, and ultimately, money. These changes could open new chances to invest, or new risks to avoid. Staying informed means you won't be blindsided, because big shifts often happen quietly at first, then explode into headlines. The next part will lay out a clear action plan you can use. Action plan for viewers. The world feels unstable. Debt is rising. Wars keep breaking out. Prices jump up and down. But you don't have to be a victim. Here's a plan you can follow. First, build an emergency fund. 3 to 6 months of expenses, keep it somewhere safe and easy to reach, so you're not forced to sell investments in a crisis. Next, avoid panic buying or panic selling. Markets swing wildly, but over time they tend to grow. Selling in fear locks in losses. Think long term. Consider dollar cost averaging. Put small amounts into investments regularly. No matter what the headlines say, it smooths out the highs and lows. Diversify. Don't bet everything on one stock, or one industry, or one country. Spread risk across assets. Stocks, bonds, real estate, some cash, maybe a bit of gold. Keep learning. Understand how interest rates affect your mortgage. Learn how inflation steals buying power. Know what debt you're taking on. Remember taxes. They eat into profits. Use retirement accounts, like a 401k or IRA, to reduce tax bills. Small tax moves save big money over decades. Stay nimble. Be ready for surprises. New laws, new trade deals, new crises. Those who watch closely spot opportunities first. You don't need millions to start. You need discipline and patience. Wealth builds slowly, at first, then faster as the years go by. One day, you'll look back and be glad you started. The passive path is about helping you get there, step by step, even when the world feels upside down. The next part will wrap every... The world is changing fast. Economies rise and fall, leaders come and go, markets boom and crash. But knowledge stays and gives you choices. That's how wealth is built, not just with dollars, but with information and calm decisions when everyone else panics. Don't wait for the perfect time. Start learning, start saving, start investing. Even small steps matter, because one day, those small steps turn into freedom. This is the passive path, helping you build wealth even in uncertain times. If you found value today, like the video, subscribe for more insights, and share your thoughts in the comments. Stay ready, stay smart,